Good evening, everybody. It didn't show me in the stream. Good evening. How are you? I hope you have had a wonderful week. Here, it's been a week, let me tell you. And this is the news. So I want to bring, first and foremost, our financial expert from VistaFront Partners, Mr. JC Schweingrouber. How are you this evening, JC?
Hey, well, happy weekend, everybody. I'm doing great, considering, but I'm doing great.
Man, oh man. I mean, just another really rough week, huh?
Yeah. How's everyone's 401k doing? That's got to ask because it was a brutal week, and we ended the week down probably 1,500 points on the Dow.
Mm-hmm.
So it was just a rocky up and down week, and 1,000-point swings. I mean, one day we were down 1,200 points on one day, and then you rally again another day. It's just all the volatility. We've talked about it a lot on these episodes. Just so much volatility. But here's the kind of news that you don't want to hear. The market, all three indexes, have been down significantly 8 straight weeks.
Mm-hmm.
And the last time that happened, 1932.
Not
Now,
comfortable. That doesn't give me the warm and fuzzies.
no, it really doesn't. It really doesn't. But I wanted to stress that as rough as things seem, there's so many good bargains right now on so many great companies that I'm getting, like, as much as it feels like standing in front of a locomotive when I have to place a trade. Like when the market was down 1,200 points the other day, they're buying. Like, you have to. It's like standing in the train, but that's we're dollar costing in during a bear market, and that's kind of the smart play. But that's not really the news you want to hear. But if you're looking to buy stocks cheap and get into the market, I don't know how low it's going to go. I don't know where it's going to go over the next 6 months, but I'm very confident over the next 6 years that we're going to be up. So if you have a long-term time frame, then wow, what are you waiting for at this point?
Isn't that the truth? I mean, I was listening to a couple of the sources I listen to get my inside track and my information. And, they were talking about something that you've talked about on the show a couple of times about the U.S. Treasury and bonds and how Bitcoin kind of has been taking a hit, hasn't it? So now the dollar is starting to look like the safest security.
Yeah, the dollar is certainly strengthening. If you want to kind of get on a global scale, there's so many things that are going wrong in China, and we've talked about how dumb the approach has been of the way they've shut down all the lockdowns, because no other country globally has done this, and we've all recovered and opened up, and they're the last holdout doing what they're doing. And a lot of dollars, a lot of money is flowing from foreign countries back here, mostly into treasuries, because it's a safe. But you're starting to see, for the first time in a long time, assets coming out of Asia, out of China, and heading back to America, which we'll see where that goes in the long term. But yeah, it certainly shows the strength of the dollar compared to other actors around the world.
Right, absolutely. So, all right. Where do you see us going? I'm watching the news. I'm listening. As we were talking in the green room just a second ago, all of the terminology that you have been feeding us and teaching us about for the past couple of weeks, it's coming to the forefront. I'm hearing stagflation. I'm hearing, of course, inflation, really since January, if not before then, right? Recession. It seems like they're definitely guaranteedly ready for that recession to hit. Our next quarter is coming in a few months.
There's still a lot of analysts who say that we won't hit a recession this year, more likely in 2023. But yeah, keep in mind, we just had a negative quarter in the first quarter of this year. The second quarter ends at the end of June. You live on Main Street. I live on Main Street. Does it feel like a recovery to you?
No.
It doesn't here either. Now, the GDP number may come positive. I suspect it's probably going to be fairly anemic.
Mm-hmm.
With the whole phrase supply chain, you probably heard that a dozen times this week.
Yeah.
Anybody with a baby in America has heard the word supply chain this week because of the baby formula. Now we don't have baby formula on the shelves. So, all these things that we've been talking about, I know it kind of sounds so redundant, but it's all kind of stock, it's kind of steamrolling a little bit, and it's picking up pace. And it certainly has, hurt a lot of people's 401ks, pension plans, people that are supposed to be retiring, prolonging it now. And, it's where do we see this going?
Right.
The good is we're in a bear market. Now, most people need to understand that a bear market historically will last anywhere from 8 or 9 months to 12 to 18 months. On the long end, we're looking at a year and a half of a bear market. Now, that doesn't mean you're not going to have rallies in the stock market and times when the market goes up, but always testing lows and kind of having that downward pressure. It feels like we've been in a bear market for a while, whether you want to use the technical definition of it or not. Last year really started becoming kind of really choppy waters.
Mm-hmm.
And especially before Christmas, because when inflation, we all started sort of on Main Street seeing it about May, June, July of last year. By the end of the year, we were all feeling it. And
Mm-hmm.
now by the year, all the pundits on CNBC and Fox Business and in politics talking about it. Oh, now it's a big problem. We're almost in June, a
Right.
year after the rest of us started feeling it. The market is always forward looking. All right. So keep that in mind. We'll be having a rally in the market and coming out of a market downturn before the recession even ends. And the more people talk about recession, it's like a self-fulfilling prophecy. The more people talk it, the more people hear that word, they're going to start spending their money like there's a recession. And it's like I said, it's a self-fulfilling prophecy. And you're seeing that this week. People have stopped spending money or started spending money differently because earnings at Walmart, of all places, they missed their numbers pretty big.
Really?
Yeah, absolutely. Their stock got crushed 25% on the week. They lost 25% of their market value.
Mm-hmm.
Target, same thing. And you're looking at a lot of other companies. So those were the two big ones. But you're looking at a lot of other companies that had similar problems. Retail companies where they're not selling because they have supply chain issues. They're not getting things on the shelves. Now, if you ask, I think I was reading, or no, actually, I was watching someone on, I think it was CNBC yesterday. They were talking about how people are spending on their credit cards. So Citibank or, like MasterCard, Visa, they have a good grip on where people are spending their money.
Mm-hmm.
They're not spending money on things like T-shirts and apparel and things at Walmart and Target. They are spending more money on luggage. They are spending more money on travel. So people, I see this commercial all the time with Ewan McGregor on it because, Obi-Wan Kenobi, right?
Right.
Walking around, he says, are you going to think more about the things that you owned or the things that you've seen?
Right.
I love that commercial because it's a tourism commercial. I think about maybe going to California or something probably, but I think I thought it was a brilliant commercial the first time I seen that. I was like, wow, that's really great. It's a great message. I think that resonated with a lot of people that after being pent up for 2 years, people are wanting to go out and just breathe and see things and go places and see some new things. And they're putting off other purchases that they would normally get at your Walmarts, your Costco's, your Kohl's, who's in kind of big trouble too, Kohl's, and Target, because they just seen such crushing numbers. Now places like Home Depot did okay, even though their stock got beat up pretty good too this week. Everything got beat up this week. But if people, if they're going to spend money, they're spending money on home renovations and things like that. So there's a shortage of housing out there, but there are plenty of people, it looks like, that are spending money to upgrade their home.
I'm definitely seeing a couple of things here in the Southeast region. You're also in the Southeast, so I'm in Atlanta. And in this area, the housing bubble is about to burst, and it's going to burst really hard. And I'm seeing some changes. There's definitely less houses going onto the market right now. People are just not out there looking to buy as in hordes like they have been for the past 18 months. Our houses in this particular area, any suburb of Atlanta, really, as long as you weren't looking inner city within that 285 radius, that's sort of the encampment of the city, because we don't have any natural boundaries. We just sprawl, right? So everything was was selling within days. I mean, some of the houses didn't even have a chance to, the real estate agents didn't have a chance to put the signs and the posts in the yard, and it was already under contract. So we're noticing big changes there. I'm also noticing personally, grocery stores are empty as far as people goes. They have been really, really quiet. And that's very unusual. I live near a large reservoir. So we attract a lot of people up here to go enjoy the lake, boats, all this kind of stuff. So our grocery stores this time of year are usually packed to the gills. And it's been very slow. I thought that was quite interesting. I went to the dollar store over the last weekend, and it was packed. And there were people shopping, like grocery shopping there. And I thought, oh, this is interesting. So I just looked up Dollar Tree, I believe. I was curious while you were talking about the stocks for Target was down, Walmart was down, Dollar Tree Inc. was also down, not quite as big of a hit. So it's down 7 points, 7.5. But, it's quite interesting that travel is still attracting people because that's a huge expense, isn't it?
Yeah, it really is. And with where gasoline is going right now, and oil, still upward pressure on oil. I'm just pulling up Dollar Tree's quote too, and year to date it's down like 9%, and it had a rough week too, and so did Dollar General and a lot of the others. One of the canary in the coal mine things that I always talk about is like when people switch from shopping in other places and they start going to dollar stores to buy. That's when people are kind of in recession mode. So maybe in your neck of the woods, people are doing that. Now the Dollar Tree here and the dollar stores here are packed, but that's you see them because there's quite a few of them around here. But when people go in there to buy their groceries, that's a different thing, because most people go to Walmart to buy their groceries, or Kroger, or whatever your local food store is. But the problem with those stores, one of the reasons they're getting beat up too, is because they are dollar stores. They don't have the pricing power. Yeah, I know they're big and they do have economies of scale. Have a supply chain issue and inflation, and they're a dollar store. They can only raise so much on their clientele. They're really squeezing their margins, so their margins are really hurting. Whereas Walmart, even if they've had supply chain issues too, they can weather a storm probably longer than a dollar store's, because they're just right. They're everywhere.
Right.
If Walmart goes out of business, we're all in trouble at that point, But
even Walmart. So how is it in your neck of the woods? Because I've noticed over the past couple of years, let's go back 10 years ago. So 10 years ago, yes, if I wanted to make the trek a little bit farther out to go to Walmart to do, let's say, just general grocery shopping, my bill was going to be 20 to 30% less than if I went to a grocery store nearby. I've noticed, and I stopped going to Walmart because in the past 2 or 3 years, it's pretty much the equivalent. It really hasn't shown to be that huge of a deep discount like it used to be.
The only reason, it's the same here, but people just go there out of habit and convenience because you can get other stuff there too. And and maybe that's why they're still packed, but maybe that's one reason why they've seen such a rough week with their numbers, because they should have anticipated a lot of what happened. You think they'd be a little smarter than that. Then they came out first and was like, well, maybe Target, they have good management there. Well, no, Target had the same problems. I mean, some different problems too, but it's kind of the same thing here. Now in my neck of the woods where I live at, I'm kind of out in the country. So I don't live in a city suburb or anything. So for people here to go shopping, they don't go to Walmart, or like there's not a whole lot of mom and pop stores in this little small town, because 15 years ago Walmart sort of ran them out. So a lot of those just closed up shop, and you still have some. But when people go shopping here, they drive to the nearest city called Bristol. Now people may know Bristol because there's a NASCAR track. So if NASCAR fans, I say Bristol, that's in Tennessee. That splits the Virginia-Tennessee line. Like the Echo and the guy commercial. I'm in Virginia, standing on the State Street. I know exactly where that's at. I've shopped up and down that street. So people go there, and that's literally about a 50-minute drive away because they have so many more restaurants, like chain restaurants and things like there to do, and then other mom and pop restaurants. You just don't really have a lot in these small towns. So when people go shopping, they drive there. And you see, once the pandemic is over, a lot of people do. That's what people do here on the weekend. Like I would not be surprised if my brother-in-law who are in Bristol right now, just kind of hanging around, eating there and doing whatever. Even if they go to a Sam's Club.
Sure. That's how it is where my parents live. They're on the border of North and South Carolina in a small town called Tryon. And I moved there with them. My father took an early retirement. He was in his 50s, and I was still a teenager. So I went to high school there. Same thing. It's 45 minutes no matter where you go to get to some type of shopping, especially a Walmart. It's going to be 45 minutes to, almost an hour to get there.
Yeah, I'm about 10 minutes away from a Walmart, it's like super Walmart. But if I want to go somewhere like Bristol, I live about an hour away, 45 minutes to an hour away from an interstate. In either direction I drive. Wow. So, but it kind of has its charms too. I mean, there's a major area, the highway runs through here, but if I want to go to an interstate, I have to drive, from out of the sticks, so to speak. I mean, it's got its little charms, I guess, but small town. Yeah, so that's it's kind of unfortunate, but I mean, that's kind of the shape of the economy right now that people are looking at, from suburbs of Atlanta all the way to rural America, where there's not a lot of these shopping opportunities, but you see the shopping patterns changing. Mm-hmm. It's very obvious.
It is very obvious. So a couple of things, gas prices, of course. We've all heard the news. I believe yesterday morning they said everybody, everywhere, no matter where you are in the United States, everyone is over $4 a gallon in gas. And then this morning it was even worse. I can't remember if it was $4.20, $4.30, but everywhere is over a certain amount, over the $4 mark. I have to tell you something. So in filling up my car, I have a Volkswagen Atlas that I use as our family car, and it's 7-seater. It works great, but it drinks gas. It is so bad on gas. And I had to fill up half the tank, and half the tank cost me over $50. I stood there looking at that thing. And then I drove my kids into school the next morning. It's end of school year, so lots of parties, and they just had tons of stuff to bring in, which is why we were at the dollar store. So the candy and the extras for their party they brought in. Yeah. I passed over a dozen Teslas in the car rider lane. I kept looking at these things, and I'm like, I wonder how much are they going for? Because we have been looking for the past couple of years, what can we turn our car in and move into another vehicle that's more fuel efficient? So I know the fuel efficient vehicles, right? The BMWs are great. Honda's wonderful, so on and so forth. They're expensive once you get to 7-seater. And there's no way in the world I'm spending that kind of money where, I mean, you're looking at an Audi or something like that. It's almost $100,000 vehicle. No, there's no way. I looked at the Tesla Y, 7-seater. It was actually affordable. It was no more than what we paid for our Suburban when we got a Suburban a few years ago. I ordered one. I said, forget it. I'm done. I'm done with these gas prices. It's the same car payment as what we're paying right now, and we're not going to have the gas bill.
So how long do you have to wait to get your Tesla?
We'll have it in November.
Because that's the same thing with a lot of cars, not just Tesla, but a lot of cars, because there's such the shortage of the semiconductor chips because of the China lockdown, right. And because that seem like they're so married, that have such a tech presence. It's a real pain because I know people who just want to get a gas guzzler that are going to be waiting 4 or 5 months, and they're going to be paying probably twice what they normally would in a regular year without inflation. If it's just, if we go back to 2015, I mean, those prices would be great. But now I drive an Envoy, and that's a big automobile, and I love it. But gas, putting gas in that, fill that thing up is a pain. And I went and filled the a Terrain up today too, the other vehicle here, and I was probably about a quarter of a tank, and I had I think it was $50 for that. So
Yeah, and it's like our choices are either we keep the vehicle and it just drinks gas, like it's Dom Perignon or something, and we go less places. But with our family at the ages that they are, we have 10, almost 12, and almost 15, and she's going to get her permit and want to learn how to drive. It's impossible for us in this age of family that we're in. So I called my husband and I'm like, you know what? I'm feeling my gut feeling and watching the news and talking to you. These gas prices are not coming down anytime soon. What do you think?
not anytime soon. We've shot ourselves in the foot with policy by shutting down pipelines. I mean, we took so much off from from the pipeline from Canada, the Keystone Pipeline. We took, I don't know how many hundreds of thousands of barrels offline in a week. That and we need more refining capacity. Now, I don't think we're going to get to the point where we're going to be able to wean ourselves off of fossil fuels.
No.
Because when you plug in your electric pump at your home to charge your Tesla or whatever you're charging, well, you got to wonder where the power company gets their power. Coal, oil, natural gas. I mean, not everybody has a windmill, hanging out in their backyard. And so there's these, there's problems, and it's still not economically feasible. And the policies that are driving people to buy cars they can't afford, most people can't afford, Teslas or some of these other, and they don't think about when my car battery dies.
Mm-hmm.
I spend $150 on a new battery. The car battery dies in your EV. What are you spending? $5,000?
I don't know.
It's they're pretty expensive. They're not cheap. It's not $150.
You didn't think about that, JC.
It's pretty pricey. And now well, you bought probably the best model out there. I mean, Tesla. I mean, if I was going to buy an EV, I'd buy a Tesla.
I was very satisfied with what I looked at. I have been approached a couple of times in our journey of looking for another vehicle. My husband's like, what about a Tesla? And I'm like, no way, I'm not spending that kind of money. And then I have to stop and let it sit there and charge. Are you kidding? Because I'm slightly militant when it comes to getting from point A to point B. So I'll tell the kids, listen, if you're going to have to stop and tinkle, don't drink any water in the car. Go to the bathroom before we leave. We are driving. It is 2 hours. You can hold it. So I was very satisfied, though, to see that it takes 15 minutes for a full charge, and that full charge is good for approximately 330 miles.
Yeah, that's awesome.
All right. I'm sold on that. I did not think about when the battery needs to be replaced. What type of cost is that? I did not think about that. But it's crazy the things you don't think about. The entire hood on the front of it is all storage because there's no engine.
Yeah.
And I'm like, that's crazy.
I know. I want one of those Back to the Future DeLoreans. That's what I'm looking for. It runs on biofuels. Now, eventually, technology will get us where we need to go.
Sure.
But it's just right now, it's almost like the government policy is trying to force it, and it's just not ready yet, economically feasible for most people. So that's not helping any of the situation at all with the market, with the economy, with inflation, with the supply chain. I mean, I wish I'd focus on one problem and fix it first and then move on to the next. But it's almost like every problem gets kind of, language, a half-assed solution. But that's typical in politics. Would we need politicians if they actually solved all our problems? No. So I hate to be cynical that way, but that's, it's just the way it's always been. It's probably the way it's always going to be.
Well, true. And, it's very easy to get tunnel visioned if you just watch the news and you don't take a step back and do your own research and really, really think about these things. They want to focus on vehicles, get everybody in electric vehicles, get everybody off gas. Okay, But think about all of the other things that still require gasoline. You have all of your lawn equipment that is either a mix of oil and gas,
Mhm.
or you know, you have your generators. They require gasoline. There's a lot of things that we're just not going to pull away from it, and it's going to be very interesting to see what does happen. I don't think we're going to go back to be able to see what we did see, 2 years ago, of almost 99 cents a gallon.
Well, I would never say never, because if we brought all of our pipelines back on and there was peace in the world, you didn't have Russia, Ukraine, and
Sure.
everybody on and we could pump us steady supply. We turns out we have more of it than anybody else on the planet, and the whole time we thought OPEC was in control. They don't have to be. We can always change our policy, and if we do that, we can drive prices back down to a more reasonable level. $1.50 again. But who knows? I never thought we'd see another what we saw under Trump again. After when Bush was in there, when
Yeah.
Bush was, when we had the Gulf War, and everybody was paying kind of much higher prices, and then I think when Obama first got in there too, and they kind of had that war on coal and coals, so to speak, and so we saw prices go up then, and but they came down. But hopefully it'll do it again. But who knows how many years? I mean, it's not happening anytime soon.
And something else interesting is happening in the market. We talked about this for a second in the green room, but there are a lot of people, a large population of people who have been very smart with their money. They've been very smart with their 401ks and their investments, and they've been able to retire early. And I say early, meaning somewhere within their 50s or right at 60, before retirement age. And I heard a report today where retirees, early retirees, are re entering the workforce. How do you think they're going to be received? Because it's kind of been the age old for at least the past 20 or 30 years now, where if you get laid off and you're in your 50s, it's like, good luck, bud. They're going to hire that 20-year-old that they can teach their habits to, they can pay less to
Yeah.
do your position. How do you think they're going to be received trying to get back into the workforce?
Well, the good news is that there's plenty of jobs. Now, during a recession, that'll shrink up, that'll dwindle down because companies won't be willing to spend for this. However, during times like this, and we've seen it over and over during recessions, that people tend to be more innovative. What is a side hobby, a side business, becomes a real business. They take a hobby and start making money out of it. And as people come out of recession and willing to spend more money, those types of businesses do pretty well. So you'll probably see a lot of people for the first time trying to be an entrepreneur, and I hope they're successful and stick with it. But there's a lot of workplace still hiring they can get into. Maybe the old job they had they could still go back to, because keep in mind a lot of places are having a hard time filling open positions. It's just look at any restaurant. You want to be a bartender. I know it doesn't sound that much fun, but I knew a guy in Cincinnati. This was some years ago that worked at a particular bar in a decent neighborhood. He only worked 3 nights a week. I think 6 hours each. The guy made $1,000 a year. So, there's always money like that to be had, and
There certainly is definitely money to be had for the hustlers out there that can pick up a couple hours here and a couple hours there, and it definitely has become difficult to be a small business and entrepreneur.
yeah, tell me about it. So, it's tough, and you know it too. I mean, because the business you have, it's touch. It's sometimes it can be touch and go, and it's the most stressful thing in the world. But I would tell anybody it's still the most rewarding thing in the world. All the stress that I have for this, I would not give up to go back to any of my corporate jobs, even in the same industry, because I don't want to pad somebody else's pockets and chase their dream when I should chase mine.
Yeah, and there's something to be said for someone who's able to just clock in and clock out. That is a beautiful thing. When you are at home with your family, or if you don't have a family, you're doing your own thing after hours or before you go to work. It's all you. You get to really truly cleanse your spirit and your soul, right? But
Oh
then
yeah.
once you're an entrepreneur and you're working for yourself and you're running a business and you have partners and you have workers underneath you, all of that and the taxes that come quarterly, um, everything that has to be renewed as far as licenses and this, that, and the other, workman's comp, if you have a company that requires it, it becomes very expensive. It also, requires you to work 24/7. So, JC, are you still there with us? I believe you have frozen. Can you hear me? Oh, okay. JC is going to pop right back on in just a moment. So this is the news segment of the Caffeinated Cooper Show, and I am so glad that you are here with us. Please let me know, what are you doing this weekend? What kind of plans do you have for us? All right. JC is popping off. He will be right back into the broadcast in just a moment. So tell me, what are you doing this weekend? What are the great things happening in your neck of the woods? I know that we have many festivals this time of year. Atlanta is a very nice place to come visit. This past weekend, I was able to chaperone the fifth graders. We went to the Georgia Aquarium, which is located in downtown. It is absolutely amazing. They have everything from penguins. They have a sea lion show, a dolphin show. It's just superb. They also have opened up a grand ballroom, and that is where they have the beluga whales. I was about to say, the big white ones. My brain saved me there. They have the beluga whales that will just swim all the way around the room, and it's just beautiful. So make sure that you check that out. And hello to Hunter, I believe maybe your first name, a Mossy Horn Hunter. Good to meet you and welcome to the show. It is lovely to see you, Jane. Jane Yvonne Bunker, she is a Reiki master. I believe she has met master level. So make sure that you go on Facebook and check out our dear friend, Jane. I'd love to have you on the show one day, actually. And let's talk about everything that you do and you have going on in your world and how maybe we can meet up with you. I know a little bit about Reiki Masters, and I hope that I'm pronouncing that correctly, but I don't know all about it. And I've really gotten into meditation to cleanse myself, cleanse my brain. Sometimes when you have that brain that just races on without you and you can't fall asleep, or you wake up in the middle of the morning when you should be sleeping, and you're thinking, I didn't do that. I got to do this. I have to call this person. I got to go there. Where's my to-do list for this, that, and the other? Meditation is so wonderful. I have kind of been turned on to a lady, her last name, I believe it's Emily Fletcher, I believe. And she did quite an interesting symposium. I have to find it and I'll post the link so that you can listen to it. But it's about opening up your sexual vibes and becoming fulfillment, looking for a need rather than being need and expecting someone to fulfill you. And it's great. It is phenomenal. All right. So JC looks like he has not popped back on. So I know we have a couple more points to talk about this evening, but while we're talking and we're chit-chatting here, let me know, what do you have going on? I found you on Green Greg's. Yes, Green Greg's was on the show fairly recently. And okay, JC is coming back into the show in just a moment. He is unplugged. He is resetting and he'll be back in just a moment. I'm chatting with our folks. All right, just had to send that off to him. So Green Greg, he's actually a friend of my sister. And Green Greg is really interesting because he is a literal rocket scientist. And so he works at the Aerospace Museum in Alabama. He is also working on a completely self-sufficient housing system to where you have your garden inside, sort of like a very open floor plan, glass, lots of glass involved in this house. It's not a glass house, but lots of glass. It's absolutely beautiful. Take a look at that episode, which I believe is about 6 or 8 episodes back. So season 6, I want to call it maybe 35, 37th episode. And Green Greg will absolutely dazzle you. He's a worm farmer. And we talked about that for a moment. He is also able to help you develop your small garden to sustain an entire family. Hello, JC is back with us. We were just chatting for a moment. Hey, Larry, good to see you. All right, so we were talking about retirees and how many of them are re-entering into the workforce. And I was asking you, how well are they going to be received? Because especially for the past 20 years or so, if you're retired or if you were in your 50s, especially mid 50s, you get laid off, it's kind of like, yeah, maybe start up your own thing. It's going to be hard to find placement because companies would much rather find that 20 something fresh out of college without any bad habits, so they get to train them the way they want and pay them that 20 something pay, not what you've worked up to. But you had a good point that I definitely wanted to go over. It was risks within the portfolio for retirement, right?
Yeah, absolutely. One of the things, I love analogies. I use a sports analogy or something, or a fishing analogy. Well, a few years ago, I remember watching this. I lived in Cincinnati at the time, and I went to see this big picture, this movie in IMAX. I'm in this big theater, and the screen that goes over my head, so it's like I'm in the Alps. The only thing is they don't have the air conditioning on enough to freeze me to death. So I'm watching, and I'm mesmerized. And these are all professional mountain climbers. And one of the things I learned was that any professional mountain climber will tell you that getting to the top of the mountain is just the beginning, right? Because once you're at the top of the mountain, your goal is to get down safely. Now, I didn't know this, but our bodies are designed in a way that makes it easier to go up than it is to go down. And that's what all of them talk about. So going down the mountain is actually much more treacherous than going up because your body fatigues so much faster. Any kind of thing that you found going up can go wrong going down. So you can kind of be a little bit more, I guess, and when you're a professional, you can be a little bit more predictive about what's going to happen on the way up. On the way down, it's 50, it's just so many risks and challenges. And if you fall, it's not like you're harnessed and you're going up. If you fall, you might be harnessed, but if that harness doesn't work, how fast you accelerate going down and what kind of injuries you can have, spectacular. And so I watched this and I thought, that is really a lot like retirement. So once you get to retirement age, you just reach the top of the mountain. Now you got to go down to the other side and get there safely. And this is the point not when you're still working and adding and accumulating, because that's what you're doing all up until that point. So there's enough risks in investing. So now not just do you have to take risk because you're still in growth mode, because you're going to be living 20 years in retirement at least. So there are things that scare people to death about retirement. And that's why a lot of people will prolong it. And over the years, I've talked to thousands of investors with the companies I've been with. And when I talk to all these retirees, the biggest fear they have, and this is kind of a jargon term, but it's called a longevity risk. Mm-hmm. But in plain English, they're afraid they're going to outlive their money. Yeah. So that is one of the most treacherous things on the downside of that mountain that you have to manage. How much can you take out each year? How do you need to be invested to keep your money safe but still growing? Because you want to, when you pass, you want to leave something to your heirs. You have a spouse, you want to leave something to children, grandchildren. So how do you manage all that and still have a good quality of life, standard of living? Now toss in all these other risks, right, on the downside, and we are living them right now. So I wanted to just mention a few of the risks other than just outliving your money, and then that people need to think about. And I kind of, some of the viewers, I challenge anybody to just kind of use this as some homework. People spend more time planning out their vacation than they do planning out their retirement. And it's really, that's not good. I've mentioned that before. But you have so many things. The first thing I want people to do when they think about retirement, I don't care if you're 25, 55, 35, whatever. I want you to write a paragraph. What do you see your life like in retirement? How do you want to live? What do you want your lifestyle to be like? Do you want to travel a lot, or do you just want to like have a nice little cabin by the lake? What kind of costs are you looking at? What kind of income do you need each year to sustain your cost of, sustain your lifestyle? And just spread it out, say 25 years, just in case. Because, people are living into their 90s. You don't want to run out of money at 86. So hopefully, you don't have a lot of issues on the downside of that mountain to have to worry about, other than how much do I need to accumulate in my investing lifestyle now to the time that I retire. And then how do I navigate these, crazy markets and this and the other, and get to that point, reach that goal. So other than that longevity risk, there's market risk, and no one can predict the market. Actually, a few minutes before we came online, I looked up some really interesting numbers. It's off of Wealth Tender. So I just found some interesting things here, and these are very common, scenarios people face in retirement. So I found this to be a really interesting link. So you can't predict market returns. No one can. But if you look back, if history is any kind of guide, over a multi-decade period of retirement, like, if you're building for retirement, you should expect about 10% a year on average. But keep in mind, there's some corrections in the stock market. You're going to have some of those, those losses, if you sell every 2 or 3 years anyway, on average. A bear market, probably about anywhere from every 6 to 8 years. And so you're looking at, in a bear market, as a 20% loss or more in value. So if you're retired and you see that now, it's like, oh, wow, I'm in the point where I'm taking money out and I'm losing this kind of value. Okay, that's tough.
Yeah,
okay, tough. So when your retirement income depends in a big part on the size of the portfolio and its returns, taking a 30% loss on the NASDAQ is devastating.
Mm-hmm. Right.
Sequence of returns risk. Now, this is a really interesting term. Basically, what this means is that the market's going to drop. Like, as soon as if you retired last fall and you're dealing with this now, that's returns. That's, you need to sell when the market is low instead of, selling when it's hot.
Mm-hmm.
So it takes a long time for your portfolio to kind of get over that and grow out of that. So there were two scenarios. I'm going to read these to you. Okay. Quite interesting. In both scenarios, you retire with $1 million portfolio, and you draw $40,000 a year. And this is just saying, hey, there's no inflation, so we're just going to assume no inflation. In scenario one, you experience 6% annual losses for the first 3 years of retirement, followed by 9% annual gains in each of the following 7 years for that 10 years. In scenario two, you experience the same returns, but in opposite order. So the first 7 years, you have 9% return. And then the last 3 years, you have 6% losses on average. So it says here, mathematically, if you neither contribute to your portfolio nor withdraw from it for this decade, the ultimate results will be identical in the two scenarios. However, since you are in retirement in this example, and starting at the same average annual return of 4.26% over the decade in question, you end the decade with a 7.7% loss in scenario one. Scenario two, you have a 7.9% gain. So just changing the order of returns and results, it results in $155,000 difference in outcome and how much you have to deal with, can work with. So, so that's a risk you take, when going into those down years first or last.
So help me understand this. So if I was to factor in 25 years of longevity within my retirement and I have $1 million, dividing that out over 25 years is only $40,000. $40,000 does not go very far today. Am I correct in my math? And
well, yes, but you're not considering that if you're still in the market, you're still growing.
okay.
So a rule of thumb that people, and I kind of tend to deviate from this a little bit, but a rule of thumb that has been around, that if you build up your portfolio and you take out 4% a year for your income, and assuming you have a sizable portfolio, and if you're comfortable with that, but some people don't have that sizable portfolio and they have to take out more, which is a larger percentage, 6, 7. That means whatever you're taking out, you need to replace that with growth.
Okay.
To maintain the size of your portfolio, to have something to leave to your heirs, because that's assuming if the math that you were doing is if you just put it all in cash,
Right.
and so you're not really getting any kind of returns. If you're looking for any kind of returns, like, you can always buy dividend stocks, preferred stocks that don't have a lot of volatility in them, and then kind of know what percent you're getting in your dividends and live off of that. So, I mean, if some of those you can find 5%, 6%, and if you're comfortable with that, you can certainly do that. But now all of these risks, I'm just going to tease you a little bit because I wanted to maybe on the next news topic, we'll talk a little bit about how to get around all those risks. So if you're watching, you might want to jot some of these risks down because we'll talk about them a little later. We'll revisit this because I don't want people. The younger you are, if it's like going on a road trip. If you know there's an accident ahead, then you can plan and take a detour. So why go through all the obstacles if you don't have to? The younger you are, think about these things, plan for these things. That's why it's important to have a vision of what you want your retirement to look like. Does that make sense?
Yeah, that totally makes sense. I'm typing that in so that everybody knows we've properly teased it. So you will help us in the next show, solutions for the risks in retirement.
Yeah. And there's a lot of these risks. Like another one right now, we've talked about interest rate risk. You have a lot of people who prefer fixed income and have had no return really whatsoever on any kind of fixed income. And so you kind of have to look now with the changing rates, like, CD rates will eventually go up. Now, still, they're historically low. All these bond rates, all these are still at historic lows. So even if the Federal Reserve cranks rates up to 3%, for crying out loud, that is still historically low.
Right.
So we've just been used to zero. If you're a fixed income investor, you've been pissed off for the last decade, because you're running into the stock market. And the more rates go up, you'll see people pull money out of the stock market and go back into treasuries or those TIPS, those Treasury inflation protected bonds. The purchasing power to keep up with inflation, whether you're growing it or not. So you still have that. But inflation risk is another one. Here's the biggest part of inflation: when you're retired, healthcare inflation. Even if you're not retired, to deal with everything you deal with your healthcare company now, and the health insurance plans, and just how much you pay in deductibles, it is enormous, and the cost of medication. So that is, especially when you throw supply chain issues on top of this, we're talking inflation risk, especially in your healthcare. So that's another risk you take. Here's the biggest one. Well, other than you're not living too long and run out of money, is investor behavior risk. This is something I try to preach to people about, having that patience and stomach. And this is why I harp on this so much. There was an article that came out, according to this thing that I was reading in Morningstar some years ago, that said that investors underperformed mutual funds in a 10-year period. On average, it was a huge amount of them. It says here, investors as a group do extremely well at buying high and selling low. A great way to lose out on good investment returns.
That's
Uh,
just backwards, isn't it?
yeah, it says shows on average over the 3, 5, and 10-year periods, investors underperformed the mutual funds they owned by 0.25%, 0.5%, and then a full percent, respectively. And then there's a chart here for this, and the whole thing comes down to how much volatility somebody can take, and not knowing your own limits. And the dumbest thing people can try to do is time the market. Like I keep telling you every episode, I don't know where the bottom is, but years from now we're going to be higher. 10 years from now we're going to be higher. And that's why when I see something that's a fair value, I like buying it. And I look at things like they're on sale, and that's one way to look at it. So what all this means to your investment results, according to this, to bring into perspective, here's how badly investors hurt themselves through their emotional investing behavior. The graph below compares the result for two hypothetical investors who each invest $12,000 at the end of each year from age 25 to 65, where one simply invests and allows the mutual fund's hypothetical 7.05 annual return, while the second tries to time the market and then 6.1% return in the same mutual fund. So over that 40-year period, the active investment portfolio reaches a healthy 1 million. All right? So keep that in mind. If you're 25 years old and you have 12,000 a year, you can make a bunch of money on average, and that's underperforming the average of the market. However, the buy and hold guy, his portfolio was 2.4 million, investing the same dollar amount, in this very same fund. So the difference is his active friend. He outperformed his active friend by 27%, ending up with over 520,000 more in his portfolio, allowing him to draw an extra 21,000 a year in retirement. That's a big difference.
That is a big difference. So are there any advisors out there that would ever advise to sell when it's low and buy when it's high? Or are these just headstrong investors that are calling their advisors saying, no, I'm not comfortable. This is what I want you to do?
You'd be surprised how many advisors get jittery and do the same thing.
Wow, really?
Yeah. Even though history teaches us over and over and over again, and we have the wisdom of people like Peter Lynch and what's the guy's name? Like Urian Timmer with Fidelity and the Berkshire Hathaway group. All these people, all these good lessons over the years. And I keep this really interesting notepad here. I keep some interesting tidbits that I read in here. I'm going to read this.
Okay.
And this is a note I took from a book on wealth mismanagement. If you take a minimum of a 10-year time frame, going back for the past 200 years. So let's say, for example, when the market started in 1818. So if you went from 1818 to 1828, that's 1819 to 1829. That's 2 time periods. 1829 to 1839, again, over and so on until you have 200 units to measure by of 10-year returns.
Okay.
And they're staggered out every year like that, you see. Of those 210-year spans, stocks lost value over a decade only once. And that was from 1927 to 1937.
Right.
And that was the last of the roaring 20s going into the Great Depression, the worst of the Great Depression. And that was the only time out of 200, right, times that it lost money over a decade. So odds are, like 1 out of 200 times, I like those chances. So if your ancestors followed a buy and hold strategy in stocks for the past 200 years with a 10-year outlook over the generations, you faced only 1 chance in 200 of losing money in stocks over a 10-year period. So kind of have to look again. History is on your side.
Right. Time is absolutely on your side in that. That's very low risk. Why would you not put money into the stock market, especially now?
Yeah. And when you think of all the things our country's been through, even in that time period, we're talking Civil War.
Right.
We're talking, of course, the World War I, World War II,
Right.
Korea, a Cold War, 9/11, like anything and everything, the market collapsing, Black Monday, like anything, everything that we've been through, the Y2K thing, right?
Right.
The bubble bursting, and then 2008, 9, which was horrible. All these things we've been through, so many things that are so much worse than anything we're going through now. We made it through the Carter years. The 80s were pretty nice, weren't they?
The 80s were really nice.
So just keep in mind you have time to have patience. And I know it's so hard when it's your, and if you need help and somebody else, like we talked about how to pick an advisor, how to interview an advisor instead of them interviewing you, make sure you're a good fit. We did that episode once. Then go find somebody that you're comfortable with, that fits your comfort level. You interview them as much as they're interviewing you.
It's great. I mean, that's just golden advice. It really, really is. So I do have a question about, being the purchaser when there is news out there that there's a shortage in something. I want to know, what is your advice to us, the consumer? What should we really be doing? Because let me say this. So a couple of months ago, there was news out there. May it be factual news or rumor? I'm really not too sure, because I never wound up seeing the effects of this. Maybe it's still to come. But there was a rumor out there that glass bottles were in shortage, so there's going to be a wine shortage. Now, I am no wino, but I do love my wine every once in a while. So what did I do? I ran to the grocery store. I bought 5 bottles of my favorite wine, which is like my year's supply because I just don't have too many options to enjoy it. And I tucked it away, for a time when there's no bottles and I'm crying because there's no more wine. So, but we have baby formula, which is in massive shortage. I keep forgetting to look at my local grocery store to see if we have it. I'm assuming we do, because I have a Kroger near me and they just sent out all their new coupons, and it's all coupons for baby formula. Granted, it's their store brand. So I'm assuming that we don't have a shortage in this area. I've heard in your area, there is a huge shortage. You had mentioned cat litter. We were talking together over the week. What exactly should we be doing? Is running out to the store and just buying everything we can the right thing to do?
Well, as a Boy Scout when I was a kid, I always had this motto: always be prepared. So for no particular reason, I have 3 cases of bottled water at all times. I mean, I don't know when the power is going to go out. Something so I do that. Canned goods, if the power's out or whatever, or I can always open a can or use my gas grill out back, right? I've got 2 extra cans, 2 extra tanks of propane, just in case, right? So, no, I don't think people need to rush out and like make it a self-fulfilling prophecy. Now, if you have children, obviously, if you find baby food, baby formula, yeah, I would, if I had a baby, I would certainly be doing that. But when it comes to investing, you got to be careful about running out and like, hey, that may be a great opportunity, and thinking something's going to pop quickly, because it don't always happen that way. Mm-mm. You're an impatient investor and you buy something at $10 and it's down at $9, like I'm going to sell it. A week later, I've lost, it's only $1 a share, but still that, 6 months later, it may be up to 15. You're like, if I'd only held it, so I don't really tell anybody to try to time the market like that. Before I buy any kind of particular stock, any company, I put a lot of homework in. I like to read their last couple quarters company reports, what their forward guidance is. We live in a world like it's, every 24-hour media. Yeah. It's, it bleeds, it leads, and all this stuff. And there's always a crisis. Even CEOs, I really don't even like how often they have to report quarterly, because they don't have the ability to have a long-term vision, because there's so much pressure to put something right together quickly, which a lot of times is Band-Aids. So, having patience with a company is a good thing too, because there have been a lot of companies that one CEO wrecked and another came in and fixed, and it took 5 years to fix, and they're perfectly good companies. So just know those companies, how much time frame you're willing to hold something, and your own patience level. And when in doubt, talk to somebody that's a professional, or don't, and for the love of God, don't ever rely on internet chatter. That's a quick way to lose money.
It sure is. Well, before I let you go tonight, again, let us know, how can we get in touch with you? What is the best way? What can we find on your website at vistafrontpartners.com?
Yeah, vistafrontpartners.com. There's a contact us button on there. You can email me directly at jc@vistafrontpartners.com. And you definitely check out our website. I love to get feedback on our website, because we do have some different things on there for people to look at about investment planning, whether you're changing jobs, a little bit about us, and portfolio management style. And if you already have an account with us, there's a little link on there where you can click on my account, and it takes you over to your Schwab portal to log in there too. So we do work with people on all kinds of things, not just retirement plans, but if you're saving money for a child or grandchild, and custodial accounts or 529s, or having bigger, we don't do necessarily estate planning, but a lot of the investing that deals with that, because you might have a particular estate planner, but you also want to consult with a financial advisor on those types of investments that will fit into that kind of a strategy for you too. We're vistafrontpartners.com. We have a web Facebook page, facebook.com/VistaFrontPartners. And follow us on there. I do tend to put videos and share some interesting articles, and do maybe hey, here's how we're doing. We're down 1,200 points today. How are you feeling?
Yes, you have been putting some great videos out on Vista Front Partners Inc., which is the Facebook page. Do you have a new video coming out soon?
I'm hoping to put one together tomorrow. It's a beautiful day today, so sort of a little bit, and for the next few days we're going to get rain, so I'm sure I'm going to be bored to sit down and actually peruse through a few things, do some research, and maybe put together a short little video. And at some point after we cover how to handle those things in retirement, those stressors, I'll probably do a short video on those too.
Oh, that would be wonderful. Well, thank you so much for your time. I love having you on the show. I am very hopeful that we can do a show possibly this coming weekend, and then we can go over what is coming up, which is solutions for risks in retirement. That's going to be our next show, right? That's going to be a good one, a really good one.
Yeah. I mean, especially for folks who do this on their own, you need to think about these things. But I cannot stress how important it is for anybody at any age to start thinking about what you want your retirement to look like. Even if it's just writing down a couple of paragraphs and at least having some sort of vision. That's a place to start.
Absolutely. Well, thank you so much, everybody. As always, make sure that you email JC at jc@vistafrontpartners.com, and go to the website, www.vistafrontpartners.com. Well, I will see you next weekend. This has been delightful as always. Thank you again so much for your time.
Hey, thanks a bunch. You guys have a great weekend.
Thanks, you too. All right, everybody, I'm going to be up next with a really juicy, really wonderful show. We have Jody TeHart coming on. She is, you may know her from the cover of, she's been on Playboy. She's been on many fitness magazines. She is a fitness trainer, a lifestyle fitness trainer to the stars. So we get to ask her all kinds of wonderful questions. Everybody, thank you so much for watching the show. And as always, we are blessed. You are blessed.